Welcome to today's insightful video on the benefits of investing in mutual funds. Mutual funds are a popular investment vehicle for investors of all experience levels, as they offer a diverse range of options to build and grow your wealth. In this video, we will explore the many advantages of investing in mutual funds, helping you make informed decisions about your investment strategy. With a wide variety of mutual funds available in the market, understanding the benefits can help you tailor your investment approach to your financial goals and risk tolerance. Whether you're a beginner or an experienced investor, mutual funds can provide a solid foundation for your investment portfolio. Stay tuned as we dive into these crucial aspects of mutual fund investing, equipping you with valuable information and actionable advice to make the most of your investment journey. Don't miss out on this opportunity to expand your financial knowledge and potentially enhance your investment returns. One of the primary benefits of investing in mutual funds is the ability to achieve diversification in your investment portfolio. Diversification is the practice of spreading your investments across various assets and sectors, which helps reduce risk and enhance potential returns. Let's explore the concept of diversification and how mutual funds can make it easier for you to achieve this vital aspect of investing. The central idea behind diversification is to avoid putting all your eggs in one basket. By investing in a variety of assets and sectors, you can mitigate the risks associated with market fluctuations and economic changes. If one asset or sector performs poorly, others in your portfolio can compensate for the loss, providing a level of stability and protection to your investments. Mutual funds offer an excellent opportunity to achieve diversification effortlessly. These funds pool money from multiple investors and invest in a diverse range of assets, such as stocks, bonds, and other securities. When you invest in a mutual fund, you effectively own a small portion of each asset held by the fund, giving you exposure to a variety of investments without the need to purchase each one individually. For beginners, mutual funds provide a simple and cost-effective way to achieve diversification. With a relatively small initial investment, you can access a well-diversified portfolio managed by professional fund managers. These experts have the knowledge and experience to select and manage investments, taking the burden off your shoulders. In summary, diversification is a crucial aspect of investing that can help protect your portfolio from market volatility and enhance potential returns. Mutual funds offer a convenient and accessible way to achieve diversification, making them an attractive investment option for both beginners and experienced investors alike. Don't miss out on the next part of our video series, where we'll discuss the advantages of professional management in mutual fund investing. Another compelling advantage of investing in mutual funds is the opportunity to benefit from professional management. When you invest in mutual funds, you're not only pooling your money with other investors, but you're also leveraging the expertise of experienced fund managers. Let's dive deeper into how professional management can enhance your investment experience and boost your returns. Fund managers are financial experts with extensive knowledge and experience in the world of investing. They possess the skills and resources needed to analyze markets, identify promising investment opportunities, and make well-informed decisions on behalf of the fund's investors. This expertise can help maximize the potential returns on your investments while minimizing risk. As a beginner, it can be challenging to navigate the complex world of investing on your own. There are countless assets, sectors, and strategies to consider, and it can be overwhelming to decide where to invest your hard-earned money. By investing in a mutual fund, you're essentially hiring a team of professionals to make these crucial decisions for you, saving you time and reducing the likelihood of costly mistakes. Furthermore, professional management allows you to benefit from economies of scale. As fund managers oversee large pools of money, they can take advantage of cost efficiencies and negotiate better deals, which can result in lower fees and expenses for investors. So why not let the experts handle your investments? With professional management, you can trust that your money is in capable hands while you focus on other aspects of your life. Don't forget to like our video and subscribe to our channel for more valuable insights on mutual funds and other investment topics. Stay tuned for the next part of our series, where we'll discuss another key benefit of investing in mutual funds: liquidity. One fantastic aspect of investing in mutual funds is their affordability. They're an excellent option for beginners and those with minimal initial capital, as they offer a low entry point into the world of investing. Let me explain why mutual funds are such an accessible choice for investors at all levels. Mutual funds often have low minimum investment requirements, making it easy for you to start investing without a significant upfront commitment. This is especially appealing for those who are just beginning their investment journey or have limited funds to invest. Additionally, mutual funds offer the advantage of fractional shares, which means you can invest in a fund without needing to buy a whole share of each underlying asset. This feature further enhances the accessibility of mutual funds for investors with modest budgets. In summary, mutual funds make it possible for you to enter the investment world with minimal initial capital, providing a practical and affordable way to grow your wealth over time. Stay tuned for our next segment, where we'll explore another exciting benefit of investing in mutual funds: liquidity. Now, let's talk about another attractive aspect of investing in mutual funds: liquidity. When investing, it's essential to have easy access to your funds when needed. Mutual funds provide this benefit, ensuring that you can convert your investment into cash quickly and effortlessly. Liquidity refers to the ease with which an asset can be bought or sold without affecting its price. In the case of mutual funds, they are traded daily, allowing you to buy or sell shares at the end of each trading day at their net asset value, NAV. This daily trading ensures that your money is never locked away and remains accessible whenever you need it. Having this level of liquidity is crucial, especially in uncertain times or emergencies when you might require immediate access to your funds. The ability to quickly liquidate your investment gives you flexibility and peace of mind, making mutual funds an appealing choice for investors of all levels. Stay tuned for the next segment, where we'll discuss another compelling advantage of investing in mutual funds: the potential for strong returns. One of the most convenient ways to invest in mutual funds is through systematic investment plans, or SIPs. These plans encourage disciplined and consistent investing, making it easier for beginners to start their investment journey. SIPs work by allowing you to invest a fixed amount at regular intervals, such as monthly, quarterly, or yearly. This approach eliminates the need to time the market, reducing the stress associated with investing. Instead, you'll gradually build your investment over time, benefiting from the power of compounding. The real magic of SIPs comes from a concept called rupee cost averaging. By investing regularly, you'll buy more units when prices are low and fewer when prices are high. This strategy averages out the cost of your investment over time, potentially yielding better returns in the long run. So, if you're looking for a simple, disciplined approach to investing, consider starting and SIPing a mutual fund. Keep watching, as we'll be covering more exciting benefits of mutual fund investments in the next segment. Did you know that mutual funds can be tax-efficient investment vehicles? Understanding the tax implications and benefits can make a significant difference in your overall returns. First, let's discuss long-term capital gains. When you hold equity mutual funds for over a year, any gains are considered long-term capital gains, which are usually taxed at a lower rate compared to short-term capital gains. This encourages investors to think long-term and benefit from more favorable tax treatment. Another advantage is the tax-saving potential of certain mutual funds, such as equity-linked savings schemes, LSE. These funds offer tax deductions under specific sections of tax laws, providing you with the opportunity to save on your tax liability while also investing in a well-performing asset. Finally, mutual funds provide a level of convenience when it comes to managing taxes. Fund managers handle the taxes associated with buying and selling the underlying asset, making it easier for you as an investor to focus on your investment goals. Stay tuned for our final point on the benefits of investing in mutual funds. You don't want to miss it. Our final point on the benefits of investing in mutual funds is the wide range of options available to cater to different investment styles and goals. No matter your financial objectives or risk tolerance, there's a mutual fund out there for you. For conservative investors, there are low-risk funds such as money market funds or short-term bond funds. These funds provide stability and preservation of capital while still offering modest returns. On the other hand, if you're an aggressive investor seeking higher returns, you can explore equity funds or sector specific funds that invest in high-growth industry. Mutual funds also cater to various investment strategies. For instance, if you're interested in value investing, you can choose a fund that focuses on undervalued stocks. Similarly, if you're more inclined toward growth investing, there are funds dedicated to identifying companies with high growth potential. In summary, investing in mutual funds offers numerous benefits, including diversification, professional management, affordability, liquidity, systematic investment plans, tax efficiency, and a wide range of options. By considering these advantages and understanding your investment goals, you can make more informed decisions and achieve financial success. Thank you for joining us in exploring the benefits of investing in mutual funds. Don't forget to like, subscribe, and share this video with your friends and family who could also benefit from this information. Until next time, happy investing!